Good afternoon. Welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. These are your headlines for Thursday, September 12th, 2012. The Fed gave markets more of that drug they have become addicted to, announcing QE to infinity and beyond. You could say that. The Fed announced it'll buy $40 billion in mortgage-backed securities per month, leaving it open-ended, and it'll just keep doing it until the labor market improves. Now, the Fed committed to an extremely accommodative stance even after the economy strengthens, extending guidance for ZIRP too. But to what end? Well, stocks were up. Also, gold was up big today. We'll hear from Gloom, Boom, and Doom publisher Marc Faber, and an editorial from the official Chinese news agency Xinhua warns that massive spending to boost China's economy could be detrimental. So how does this weigh into the calculus of China's policies, growth, or slowdown? And multiple outlets are reporting John Corzine met with officials from the Department of Justice last week. This is close to a year after MF Global failed. We're not letting this news get drowned out by the Fed. We'll talk about it. Let's get to today's Capital Account. Bernanke, got to hand it to him. He announced essentially a QE until further notice policy today. Now, with $2 trillion of balance sheet expansion in recent years, but still more than 8% unemployment in this country, and with the free market, or at least the price mechanism, a casualty of Fed policy, you may ask, more accommodation for what? Well, Bernanke made it pretty clear today when he said it was to affect asset prices.
So house prices is one vehicle. Stock prices, many people own stocks directly or indirectly. The issue here is whether or not improving asset prices generally will make people more willing to spend.
Oh, yeah, perhaps we will have to see if that makes people feel richer, Dr. Bernanke. But we do sure know that the market has been addicted to easy money. Here's a chart, if you need a reminder. It shows when the Fed announced a stock program, and a program, and the stock market went up. Then the market went down when it knew that that program was going to end until the Fed announced something new or hinted at something new. And you can see, so those red marks are where the program would end. That's when the market would start falling. And the bright green, that's where you're seeing the Fed starting those programs or announcing them. Now, I spoke to Jim Rickards earlier, who told me the Fed is saying, because it's not giving a time limit for when these programs will end. It's saying you can't front run us now and you can't discount us because we're not giving you a date. And I spoke to Marc Faber before the Fed's decision. He's founder of Marc Faber Limited and author of the book Tomorrow's Gold. And here was his warning for our audience.
Well, I think in principle, you can't create prosperity by printing money. And printing money has numerous unintended consequences. But I think it's quite likely that QE3 will be announced in one or the other form. The question is, to what extent have markets already discounted the easing moves by the ECB that were announced last week and QE3 that may be announced this week?
Right. So markets which have gone addicted to central bank stimulus may be disappointed if they don't get enough of what they're looking for, so to speak. So let's switch gears, because QE3 is a story you can see anywhere. But I want to talk to you about what you're doing now, because you live in Asia, but you do travel quite a bit. And I have to ask, before we get into some questions about Asia and specifically China, what has been your impression of the American economy on this latest trip of yours in New York?
Well, New York may not be representative because this is the economy, say, in Manhattan, of the well-to-do people. And as you know, there is a huge wealth and income inequality, not just in the US, but elsewhere also, whereby the well-to-do people still make a lot of money. Their asset prices have recovered. So as an example, in 2007, Sandy Weil bought a condo in West 15, and he paid $43 million. He sold it 2 or 3 months ago for $88 million. So you can see Home prices in Phoenix have collapsed, in Atlanta they're down, and so nationwide they're down. But prestigious trophy properties have continued to actually go up in price. The same applies to Singapore, Hong Kong, Tokyo, London. The trophy properties are strong, and the property that is owned by the average, the median household, has been weak until just recently when it started to rebound somewhat.
Yeah, so it's a varied picture, and inequality is at play, and a very different picture in New York or in Phoenix. So would you say then that the economic picture is worse in the U.S. than it is being presented through various data points that people gravitate towards? And what would you be looking for as a sign of a real sustainable recovery?
Well, if you adjust, say, GDP growth in the U.S., and I'm not saying that GDP is an ideal measurement, rather one should pay attention to standards of living, the average or the medium real income, in other words, inflation-adjusted income of households. That would be probably a better measurement of whether the economy is doing well or not. And in general, looking at these statistics, the economy isn't doing particularly well. This is not to say that it is doing better than, say, Europe at the present time. But we have to also look at it that way. If you have a government that has a fiscal deficit of, say, in the case of the US, over $1 trillion, say $1.3 trillion, then this money flows into economic activity. And so I'm asking myself, in order to truly measure GDP growth, maybe one should make adjustments for the increase in the government debt, because that growth is not sustainable in the long run.
That's a great point. And just to follow up with the second part of my question, what would you see and say, okay, now I see signs of a sustainable recovery? Would it be in incomes?
I think it would have to be in employment, in industrial production, and in particular in employment that pays high wages. Because what we have had is a lot of people have lost their jobs, but have found jobs that pay less. Say, they're suddenly involved in the hospitality industry or in healthcare, or in jobs that are just low-paying jobs, such as in restaurants or fast food and so forth and so on. So that doesn't give you a clear picture if you just look at employment. One would have to really look at real wages. And then when you look at real wages or real household income, one would have to determine who is calculating what is real. Because, as you know, in America, the consumer price index, in my view, grossly understates the rate of cost of living increases for the typical household.
Yeah, that's a great point. Now, you mentioned real estate, so I do want to follow up on that, because in one of our past interviews, you did mention that real estate in some of the harder hit areas in Arizona, Nevada, and Georgia were good places to invest. Do you still feel that way, and why?
Yes, I wrote about this already about 6 months ago, that if I look around the world, and since I travel a lot, I have a little bit an impression about prices here and there. But what really caught my attention is that prices in Georgia, in Arizona, parts of California, Nevada, parts of Florida, were incredibly inexpensive compared to the rest of the world. I think if you're an American, and now there are companies that are buying these empty homes and refurbishing them, and then they let them out, and they get about the yield of 7–8%, in some cases even more, depending on the area. In the very dangerous areas, the yields are up to 15%, because nobody wants to go and collect the rents there. But in general, I think, yes, it's still an investment opportunity.
Interesting. And what about equities? Because you said better to own equities than to own cash. But even if you're right and equities outperform cash over the next few years, isn't there a risk that the government could do to equity holders what you believe it may do to holders of gold? And that's, I mean, to be frank, confiscate their assets.
Well, to tell you the truth, if you look at the composition of who owns equities and who owns gold, very clearly the majority of people directly or indirectly own equities. Directly owned equities are usually owned by well-to-do people. Poor people don't own stocks in IBM and in Apple and so forth. But indirectly, the public owns equities through retirement accounts and through pension funds, state pension funds, and so forth and so on. So to do something really obnoxious against equity holders would cause another problem, namely the funding problem of these retirement accounts. These pension funds, the state pension funds, are already grossly underwater. They're underfunded. And so if you did something nasty to the equity holders, the stock market would collapse. These pension funds would not be in a position to actually pay out their members, their retirees.
Interesting. So that's the buffer there. And speaking
yes,
of...
the gold is owned by a minority. It's not widely held. And especially if you look at members of Congress and the people at the Federal Reserve and the people at the Treasury, they own equities, directly or indirectly, but they don't own any gold.
That's interesting. And now, speaking of members of Congress, if they don't get it together, Moody's says they may drop its AAA credit rating of the U.S. if the budget after the next elections, if those negotiations don't produce policies that over time decrease the U.S. government debt. So I guess my first question is, does it really matter what Moody's or any of the three major credit rating agencies think anymore? And second, are budget negotiations even the major driver in people's decisions to buy or sell government debt in today's world, or are other factors more important in coming into play?
Yes, I think most people around the world know that the U.S. is no longer a AAA, but most people also know that if you own U.S. government bonds or bills or notes, you will get paid because the government can print money, so they can roll over their debts. But obviously, that is a threat that over time the quality of the debt will diminish. And I think it's already, if you really calculated the U.S. government debt the way a corporation would have to account for it in its accounts, then you would have to include the unfunded liabilities. Then the U.S. government debt would already be junk. But you understand, the corporation cannot print money. The U.S. government can print money. So people who buy U.S. Treasury, say a 10-year Treasury note at 1.6, 1.7%, they know it's not a good investment, but they know they will get paid.
All right, return of capital as opposed to on capital.
Correct.
Yeah,
correct.
switching. All right, still ahead, gold was on a tear today after the Fed's announcement. So we'll ask Marc Faber where he thinks the precious metal is heading. But first, your closing market numbers.
drives the world?
The fear-mongering used by politicians.
Who makes decisions?
Considerable breakthrough has already been made.
Who can you trust?
No one who is imbued with a global missionary zeal.
Where are we heading?
State-controlled capitalism is called fascism.
When nobody dares to ask, we do. RT, question more.
All right, welcome back. So after that Fed decision today, wow, look at the price of gold. It just shot right up. We have a chart showing that green line. It just headed straight up, came back down a little bit before the close. But how does Marc Faber see gold? Of course, we know how the market saw it today after the Fed announced what could amount to currency debasement with QE unto infinity. We'll hear from Marc Faber, but also first, we had an editorial out from the news agency, the Chinese news agency Xinhua, talking about how stimulus, a massive stimulus, was probably unlikely because although China's slowing down, that would be detrimental to sustainable growth. So this is after we've heard some announcements about infrastructure spending. Marc Faber knows far better than anyone on this side of the Atlantic because he calls Asia home. So we spoke to Marc Faber about both. Take a listen. To Asia, where you call home, one of the popular questions out there remains as to whether or not China's economy has entered a slowdown, will slow down further. China's premier has promised just recently that Beijing will do more to boost flagging growth in the Chinese economy. We've seen announcements for infrastructure projects. How likely do you think it is that we could see not just a slowdown, but a contraction in China and in other Asian economies at this point, given what we know?
Given what we know, even the super bulls now have to admit that there is a slowdown. And even the super bulls hopefully know how to read statistics. And if you look at the real statistics, say railroad movements in China or exports from Taiwan and from South Korea, then you know the Chinese economy has decelerated far more than what the statistics published by the government would suggest. So we have this very significant slowdown, and now they have announced some stimulus packages, and I think they'll also print money. The question is then, to what extent will the economy recover? Because you understand, the problem in China is that we have in some sectors of the economy huge overcapacities. Now, no matter how much money you throw at these sectors, if there are overcapacities, you could add to overcapacities further overcapacities, but that doesn't help in the long run. So I think that the Chinese slowdown is for real. Now, do stocks rebound? I think there's a possibility that stocks will rebound because of further easing moves by the Chinese. But I think in that case, maybe the RMB will weaken.
Now, Marc Faber, no conversation with you can be complete without bringing up gold, so I want to do that before we go. You've said approximately 25% of your assets in gold, which is a very large amount by any measure. I love your often cited quote that you will not sell any of your gold as long as people like Bernanke are running the world's central banks. So what's your near-term outlook for gold? And for people that want to hold it, how can they protect yourself from one of your concerns, which is confiscation?
Yes, I have some concerns about confiscation, obviously, especially in the United States. In other countries, less. And I still think that over time, the price of gold will go up, maybe not quite as much in percentage terms as in the years 1998 to last year's high at $1,921 last September. But I think the trend will be up. There will be fluctuations in a bull market for an asset class, say the bull market in stocks 1982 to 2007. In 87, stocks fell 40–50%, and then they went up another 8 times. So we can have big corrections in all markets, and that could also happen to gold. I happen to think that probably the correction which began a year ago and found a low December 29, 2011, has probably ended, and that we are now trending higher. But I'd like to see a correction now of gold prices down to around $1,650 per ounce, and then it should hold around that level and not move lower. That would give me more confidence that now the next leg of the bull market has gotten underway. Because don't forget, the central banks for sure will all print money. But asset markets, you know, like they printed money like crazy, but real estate still went down. So you can have money printing and at the same time negative behavior of some assets.
That's an interesting and important point. Real quickly, just to follow up, so you're concerned about confiscation in the U.S. So if you're someone living in the U.S. buying physical gold, should they be holding it somewhere else?
Yes, I think maybe you should dig a hole in your garden or hold it, say, I would think that Singapore or Hong Kong or Dubai are reasonably safe. I don't think that Europe is 100% safe, because if, say, the US expropriated gold, they would probably go to Europe and say you should do the same and so forth. And since by then the central bankers would be really in a bad position, they probably also would implement that measure.
You heard the man. Go start digging. But before you do, be sure to watch the rest of our show. And tomorrow, you didn't think we showed you the entire interview today, did you? We left a treat for you, because tomorrow you'll hear from Marc Faber on what exactly a deflationary collapse looks like in his view, because you know we've heard him talk about it a lot before, and how Europe, which is probably the best poster child right now of what a deflationary spiral looks like, how Europe is doing, in his words. That was Marc Faber, author and founder of Marc Faber Limited. All right, let's wrap up with a little loose change. Dimitri Kofinas is in studio, and we have to revisit a story that we want to revisit as much as we possibly can, because it's still so important, and some concerning news about where a criminal case is going. But let me back up. It's been almost a year since we last heard John Corzine play innocent after MF Global went bankrupt. Remember this?
I simply do not know where the money is or why the accounts have not been reconciled to date.
Yeah, John Corzine, whatever. But DOJ officials, sounds like, finally got around to questioning him. According to multiple reports that came out late last night, early this morning, that meeting was last week with DOJ officials and some other officials from government agencies. This is what I think. Dimitri, why do you think, okay, this went on last week, evidently, according to reports, this meeting between John Corzine and the DOJ. Why do you think the reports of it came out late at night, early in the morning, before a major Fed decision when everybody was expecting QE?
I don't know. What do you think?
It's a dump. They want this story to not get a lot of attention.
You see, you know, that's the thing, Lauren. Before I came to work here, and I guess I still have a lot to learn when it comes to media savvy like that, because it's true. I never would have thought of that. You're 100% correct. Absolutely. That's the thing about the media, they use that that cloud to create some cloud.
I mean,
cover.
this is pure speculation and BS. I obviously don't know anything, but I just think it's very interesting that sources close to this story or investigation or whatever, came out with this news to the press the night before a major Fed decision. When Fed is everywhere in the business news, but we are not letting that slip by anybody. Hopefully there will be criminal charges, a case, something to at least try to bring justice to this, put John Corzine on the stand. I want to see that. But let's move on, because that remains to be seen. Because there is a new game in Japan that's combining the virtual world with real life through food and farming. Take a look.
Hatakeppi. It's a virtual farming game. Players purchase tools and fertilizers and tend their virtual farms. What sets Hatakeppi aside from all the other games is that virtual farmers will receive real fruits from their daily virtual work.
So I know in the U.S. there's Farmville where you do some kind of virtual farming, but this is a virtual farming game where you actually receive the crops that you have virtually farmed in real life. What do you think is the significance of this? Because you actually really like this story. This is in Japan.
Japan.
Yeah.
Because a little further north in Korea, not too long ago, there was a Korean woman, a South Korean woman who, if I recall from memory, she had a baby and she was busy on Farmville feeding her virtual baby. She was so busy feeding her virtual baby and growing virtual vegetables that she forgot to feed her analog baby in the real world, and the baby died.
That's really horrible if that's the case, if that's true.
No, I remember that. So the thing I think is, we're going into virtual slavery, but it has real world consequences. I just think it's funny. These guys are growing virtual vegetables. They're buying real vegetables done,
Well, and to follow your line of thinking, if in fact someone was so addicted to Farmville that they neglected their child, at least in this case, if you're addicted to virtual farming, you're receiving food. So you have the sustenance coming to you, so you can feed your kids in case you forgot to go to the grocery store.
I think they should start going to virtual Walmarts, buying virtual GMO food. They should do.
Oh, yeah. Well, that would really go along with our next story, which we have barely any time for, but I want to mention it because Kraft Foods chief executive, the CEO, recently revealed that at least a sixth, if not more, of Kraft's revenues come from food stamps. I thought this was so interesting because this is, Kraft Foods, I don't exactly think of as good, healthy food. I think of Kraft macaroni and cheese. And Kraft is not alone. I mean, we've had Michael Krieger on the show who said that Walmart's essentially a food stamp play. Walmart, we know, doesn't pay its employees enough to really subsist without extra help. So essentially, the government is subsidizing these horrible foods.
It's not good.
And for people to eat them. I have a problem with this. Look, she's buying fresh foods because she is using her EBT card wisely. That's all we'll leave you on. That's my soapbox for the day because that's our show. Thank you so much for watching. Make sure to come back tomorrow.